Hi there, Serial Trader here. Alright, so definitely what I was hoping for happened today, and we had a nice down day. So those puts did quite well already. Let's just say it was a five-figure day in my favor. So it doesn't get any better than that as far as entering a trade, and then the very next day, starting from the very opening of the day, you're in the money, and then it just got better as the day went on. So let's just go over what happened today and some implications for it. So we actually had the doji yesterday. That was a good reversal signal, obviously, at least short term. And we've gapped down today. Actually went down and closed the gap. Okay, that gap from a couple days ago has now been closed. And then we've actually rejected fairly strongly off the lows and made this, long lower shadow on today's candlestick. So it's kind of an interesting thing. Let's just go over a few things before I actually go over what I did with my positions. So let's go over here to our wave chart on TradingView. Okay, so this is the labeling that I was kind of going with my preferred wave count. And I'll still cautiously lean on it for now. So this was calling for the end of wave 2, end of wave C for wave 2. And then basically you wanted to see an immediate rejection off that Fibonacci area, the equality relationship between A and C, and also the 618 of 1 down. And we've gotten that rejection quite nicely today. So that early promising signs. Still very early to get overly bearish. And obviously if this continues and follows through, and this is the correct wave count, this trend line just kind of illustrating the expected direction down in a third wave, right? And obviously you'd expect to make new lows not only below this wave 1 low, but also below the larger wave 1 low, which was the February lows. But still awful early to be confident that that's going to happen. Well, and another thing with LE wave analysis, you're always just categorizing or sorting the probabilities at any given time. And at this point, there's still several possible wave counts. I'm sort of leaning on this one as being more probable at the moment. But that doesn't mean there aren't other things that can happen. There certainly are. And let's go over those things. So I basically have three what I would call high confidence wave counts as far as just being accurate and fitting within the rules and guidelines of the wave principle. So this is my primary one that I'm leaning on currently. Here's another one. And that would show us having a wave 3 top, a large degree wave 3 top in January. And ever since then, we've been forming a triangle A, B, C, D. Perhaps D is in, and we're coming down in our wave E to complete a larger degree wave 4. And then we'd be heading up, in a fifth wave to new all-time highs after that. There's no reason to believe this isn't happening either. The only way to truly invalidate it on this particular one would be to take out what's being called the wave C extreme here, and then this could no longer be in A, B, C, D, E, and then you'd be leaning more towards this scenario. Okay, so that would be like a confirming price action to bolster this view. So that's a scenario right there. Certainly viable. If that's how you've labeled it, there's absolutely nothing wrong with that, and that could very well happen. Third scenario, okay, again, we have our wave 3 top in place of large degree. Let's say of intermediate degree. And then we have an ABC, truncated C wave, so C didn't actually make a new extreme. And then that's for a wave 4. And now we came up in 1, maybe we're going to come down in 2. Now I don't like this because of the internals. I have trouble calling this a 1 wave, but let's just humor this scenario. 1, 2, and then 3, 4, 5 up to new all-time highs in a fifth wave. So this, I just don't view it as being as likely because of the internal wave count of this proposed green wave 1 here. But it's certainly possible until you take out this low. So once again, this gets invalidated taking out this low. This gets invalidated taking out this low. So for this to be truly embraced and take a real aggressive bearish stance, you got to take out this low. And you could probably start making the case a little earlier than that, and I'll get to the other chart regarding that. Let's go back to the Thinkorswim. All right, so here we are on SPX candlestick chart again. So to me, if we can take out this trend line, okay, and that's just been trend line support on the way up. That's where everything's pulled back to and found support. So we can break below this, close below it on a daily basis, get below this T line, and also get below the level of the candlestick prior to that gap up that we had that's now been closed. And getting below that would be 26.65.16 on SPX, okay? So if we can get, let me just illustrate this a bit. If we can get some action like this, right, this would add confidence to the more bearish scenario. And obviously ultimate confirmation, which would actually be a good signal to take an aggressive bearish trade, would be taking out that low there, okay? So this is still early. This is still not, super high confidence as far as coming down in a strong third wave. Now that being said, of course I took this into account, and it's rare that you immediately get rewarded for taking an aggressive position, and yesterday I certainly opened an aggressive position by buying 100 put contracts that expire in a month. But I was really liking the setup, at least short term. I was really expecting that gap fill, and we immediately got it today, so that was nice. But typically, in my experience, when I'm aggressive and I'm immediately rewarded for it, it's good to just temper that aggression so that you don't give that all back to the market, because it has a way of taking your gains away from you very quickly if you don't take follow-up action. So what did I do? Okay, let's see what I did. I actually did a few things today. Let's just clear this up. Okay, so yesterday I initially bought those 100 SPY puts, and I bought them at the I bought them at the 273 strike. And then today the market immediately rewarded me, and had a nice 5-figure gain because of it. But then I took some follow-up action. So I sold 90 puts at the 268 strike, also expiring in May. And that changed the risk profile quite a bit. So now the maximum risk went from being 47,000 down to just over 15,000. And still pretty high potential reward here. And also a good range to realize that reward within. Okay. So, and actually the break even for the whole position is now 271. So, it's actually above current price levels where it breaks even. So that's nice. Obviously limited maximum return, but also greatly limited risk, and still allowed quite a good return. I mean, if we go down to, 260, which isn't super far away, you're still sitting on, depending when it's at expiration or not, let's call it around $40,000. So that's pretty good. And now your absolute maximum risk is 15. Not bad at all. But that's not all I did. So I also had some existing positions, okay? So let's just add those. And this was just for me legging into a few different option positions. And actually 8 different contracts at this point. Let me just add them all on. And I also bought 100 calls. Okay, yes, calls. 275 strike May expiration. And basically put myself delta neutral with my whole position here. And these are all May contracts at this point for this position. So now we're in a position, if you look at the purple line, where, okay, what's the current price for SPY right now? Okay, it's around, let's call it 269, rounding up here. So we're at 269. So that's kind of our open profit level right here. So basically any movement at this point, down or up in price, results in more profit. So we're very neutral. Basically a move of significance in either direction will start immediately benefiting the position. So what I did, I just neutralized the delta, at least for now. Now, of course, I can make adjustments to this or take follow-up action depending on what I see in the charts. But for now, and especially going overnight here, Friday, who knows what's going to happen. There was some peppiness near the end of the day today as well, so if that carries on tomorrow. That's why I didn't want to have a strong directional bias, especially going overnight with such a large position. So now I've made it neutral. And we'll let the market decide which way it's going to go, and the position will immediately react with more profit in either direction. And obviously, there is some time decay, as illustrated by this teal line. So within a fairly narrow range of price, 268 to 277, within that range, at expiration, you'll experience some level of loss. And obviously, I'm not going to allow that to be realized. I'm looking for some fairly strong commitment, I'd say within the next week or so. And if I don't get it, I'll certainly take follow-up action. So I just thought I'd share what I did with you today on that position. As it was quite a nice, surprise to wake up this morning and just see it, so immediately went in my favor. Doesn't always go like that, but it's certainly enjoyable when it does. So that's kind of my take on SPX here. I don't want to lean too heavily on the bearish side just yet, although I'm still kind of favoring it. And we'll let the market make its commitment before really taking a strong side. Okay, let's look at the Dow just quickly. So again, the Dow, it had a down day, but largely rejecting those lower prices. May have had a tiny gap that it closed, a very small one. The same one from SPX, although the SPX gap was definitely more obvious and larger. So really, and still above the T line on everything here, including the Dow. So really nothing super bearish yet. This could easily still just be a consolidation and back up again, as I showed in the other chart there. And Nasdaq Composite, so rejected off that 618 fib. Doji saw yesterday. Negative trading today, but again, not an overly strong bearish day, and it actually kind of just put in another doji. Large upper and lower shadow, small real body, and didn't even get back to the T line yet. So really, aggressive bearishness not warranted just yet, if at all. We'll see. And the VIX. So VIX again increased a little today, but still quite muted. This certainly isn't a volatility explosion for a big move just yet. It's really not a factor at this point in my analysis. If I see VIX really starting to spike and prices breaking some significant levels, then I'll start giving this a little more weight. But right now, VIX is just flaccid for the most part. All right. Hopefully that was a helpful update, and certainly an exciting juncture in the market. We should know fairly soon whether we're just going to dump or we're actually going to, trend up the new highs. Serial Trader signing off.